Hi, I'm Timothy Pope and this is China Buzzwords from Shanghai Eye, where we attempt to decode what's going on in Chinese business, finance and economics. Today, the Chinese government is a bit disappointed with the ratings agency Fitch, which has downgraded the country's sovereign credit outlook to negative. Fitch says this is due to predicted rises in the Chinese government debt levels for both central government and many local and provincial governments around the country. It's worth noting that this downgrade does bring Fitch into line with the other two major international ratings agencies, Moody's and S&P, and it doesn't mean that China's headed for default. For one thing, most of China's debt is domestic, where a default is implausible, and on the international side, China is a net creditor, meaning it lends far more abroad than it borrows. But it's not clear why Fitch chose this moment for the downgrade, because the latest economic data has been more encouraging. We saw better than expected results for retail sales, exports, CPI and factory output in January and February, and rising business sentiment in the March PMI data. And when the ratings downgrade happened, the other March data and the closely watched first quarter GDP numbers hadn't been released. You'd think those would be important factors in determining the strength of the Chinese economy and the government's ability to pay its debts. The Chinese Finance Ministry said in a statement that China's forecast deficit ratio for this year, which is 3%, is a moderate one, given the government's efforts to turn the country into a high-tech manufacturing powerhouse, support economic growth and promote domestic demand. It also highlighted the work done in recent years by all levels of the Chinese government to crack down on financial risk. That has been a big theme of a lot of the government's recent policies. The ministry said Fitch's decision was regrettable. Analysts have been a little dismissive of the downgrade too. Some assessments say Fitch is using lagging indicators, so it's not really a judgment on China's future creditworthiness, but a judgment on the last couple of years. And there have been other strategists and economists saying things like, yes, the economy has been going through a rough patch, but the risks that Fitch is pointing to are manageable, and the ratings agency's concerns are perhaps unjustified.